Hi, Dominique, and welcome to another edition of The Week Ahead. How are you doing?
Very well, Andrew. How are you? It looks
Hi.
like summer in London is already over.
To be honest, it was just sunny, and now it looks like it's getting a bit cloudy. Um, it's definitely ending, but it was a pretty good summer, I have to say. So, not a lot to complain. Yeah, so let's kind of dive right in, and go through, the past week like we usually do. Obviously the big things we're talking about payrolls. But anything else stand out from the economic, from Fed? Everything's political these days. Um, Market reactions. Yeah, so however you want to take it.
So, of course, on the Fed, the big news was Myron hearings. And it looks like it was interesting that this was a hearing for actually five administration nominees, including Myron. And clearly, the White House want to see him in place before the FOMC. Um, it didn't change my view. I don't see scope for Myron turning the Fed into a banana republic central bank. It's just doesn't have the vote. I think the incentives are not there because voters do not like inflation. That's how Trump won the election this time
Yeah,
around.
he himself said that too. Yeah.
So, I just think that President Trump doesn't like independent agencies, and he likes to make big statement, headline grabbing statement, but deep down he knows that if the Fed pushes inflation, it will be bad for his electoral prospects. So, the thing is, monetary policy is an art, it's not a science. You could have a perfectly reasonable case right now for the Fed funds to be 25 basis point higher or lower. So yeah, it's going to probably get a little more dovish, but no funda under with Myron. But I don't see any fundamental change. And certainly Governor Waller, based on everything I've heard, and trust me, I do spend time reading and listening to everything he says.
Yeah.
He's not going to push for monetary easing that would destroy the market, destroy confidence in the Fed, or he's not going to support institutional changes, which, by the way, are needed. I think, Myron has a point when he says the Fed lacks accountability and transparency. Now, hectoring the Fed on social media may not be the most efficient way of bringing about those
Right.
changes, but they are definitely needed. So we had that. I think that was the really uh, beside, and then we had the NFP, of course.
Yeah. Yeah. What's your big takeaway? We've discussed for a while, like I was even talking to people last night, like, yeah, they probably should have cut in July.
So that's my view too.
Yeah, I'm saying it was your view. And like it did seem strange, it did seem strange. But I guess it does,
Well, I mean,
yeah.
the St. Louis Fed president said it explicitly that the pressure from the White House made it more difficult for them to cut. So who knows? But the result is, I think, today's print puts a 50 basis point cut in September in play, uh, essentially because of the low, so on of the very low print. And also growing signs that the labor market is really weakening. The most obvious one is a sharp increase in the difference between African American and white unemployment, which I already highlighted last month, but this month it got even bigger. Then we had a further increase, but at a smaller pace in involuntary unemployment. then it looks like there was a big decline in the number of new entrants in the labor market. And that's typically what happens before a recession. It becomes more difficult to find jobs, so fewer people try.
Oh, so
So
some people are just not even trying.
yeah,
Yeah. Okay.
yeah. And actually, you had a further decline in participation, which could be another sign of a sort of discouraged worker effect. So that print puts 50 basis point cut
I think so.
in
Yeah.
it. Yeah, it depends on a couple of data points. So we have something called QCW, which is basically a census of employment based on unemployment insurance record. And for years, I've been saying this is totally downward biased because of illegal immigration. But I mean, because illegal workers are not participating in unemployment insurance. But
Correct.
that has stopped. So the reading we will get is probably more accurate than in previous years. Also, Governor Waller has argued that it's going to show that current NFP numbers are grossly overestimated. So we get that on Tuesday.
Tuesday. Okay.
Yeah. So that could be, that is another
Could that be
labor.
something the market's missing? I mean, I haven't looked at Sam's thing, but
The market is always
like,
getting very excited about this QCW, and in the
yeah.
end, the
Uh,
preliminary reading are large. They show that, but then they decline over time. But this time around, I think we should take it seriously. The other thing that's really interesting about the NFP is that so we have a massive decline in labor supply, and that's why unemployment is up 10 basis point, 4.3%, which is very low historically, even though the NFP collapsed,
right.
basically. I mean, and yet wage growth is not increasing. And in fact, that's the opposite of conventional wisdom. There is a very famous and highly respected economist called Charles Goodhart who wrote a book just about this topic, arguing that population aging is going to bring wage growth and inflation. And population aging is what we are seeing in the US because now that we don't have immigrants coming in, we're just seeing the impact of the population aging. So we are
Oh,
from
because you assume that most immigrants are younger.
they are no, yeah, they are younger
Yeah.
and they are not coming in anymore. They've been
That's what I'm saying. So if if you take that away from what was existing, say the inflows from 1, 2, 3 years ago, that's the change.
exactly. That raises the average age. So we have a kind of a experiment in accelerated time frame with population aging.
Interesting.
And just like in Japan, we are not seeing the wage growth acceleration. And I think it's because fewer migrants means less labor supply, but also less demand for goods and services. And also the administration policies is not only hitting the supply side of the economy with the tariff, but also the demand side because of the policy uncertainty. Also, the administration has implemented a de facto fiscal consolidation, cuts in expenditures that are being, in part litigated because there are cuts in past Congress appropriation. But the bottom line, you look at the data, and I discuss it in my weekly, it's clear they are, clamping down on spending, which is
Interesting.
negative for growth.
Yeah.
So we are not seeing wage growth acceleration. You could argue that, there could be a risk of Japanification of the US economy, but together with the impact of AI, which Waller is again arguing could, bring down inflation, it looks to me like we may be going back to the low inflation regime. I mean, it's too soon to say, but it's
Yeah.
definitely a risk to keep in mind, and also a risk that could impact the Fed decision on I think it's on the 17th, so in 10 days from now, 12 days from now.
What delta do you give to what's your percentage for 50? Like the 25 versus 50, is it like
So at this stage,
5-15 or
I am on the fence. I think it's close to 50%, but below. I mean, I'm very data driven. I'm a
yeah.
nerd, so I need the time to go through the
Fine,
NFP.
go through. Yeah, yeah. No, I
And
think the
then,
markets would still definitely leaning towards 25.
but I think the market is too focused on inflation, on the
Yeah.
latest inflation numbers, and doesn't look at the big picture. And the big picture to me is that initially we had a populist administration, one that wanted to raise the share of wage income in aggregate income, one that was saying it's mainstream, Main Street,
No,
time,
well, yeah.
it's going
Right.
to do better than Wall Street. I think this has been completely disregarded because there's been a lot of focus on um, tariff policy. And, there is a limited supply of policy focus from the administration in power. And all of it has been on tariff and not paying enough attention to the big picture. And so, in my view, we could be back to the regime we had before the pandemic, before the Trump victory, which is um, a rising share of wage income, which makes for sluggish growth and inflation simply because the propensity to consume out of wages is higher than out of profit. So when the share of profit is going up, basically income is used to purchase financial assets rather than real economic assets. So I'll discuss those more, but I think what this print brings is a risk that the inflationary background, is not as strong as you would think.
Okay, so you kind of subscribe to equities higher too. So you're not there's not really a scenario where like, oh, this is a weak number, this foreshadows like a much weaker equity market and the Fed's behind the curve.
Unless we have a recession. And I don't, this is definitely not my best case scenario, and not even with this print. I think the equity market will do very well because that's a corollary of the increasing share of profit in income. If you, one of my favorite charts shows how the equity market cap has increased relative to GDP for the past 40 years and how this is completely mirrored by an increase in the share of profit in GDP. I think we are back to this regime. Sluggish growth, sluggish inflation, a great equity market. Or at least it's a risk to keep in
Right.
mind.
Okay, cool. And then for the week ahead,
So for
what
the
else
week
stands out?
ahead,
Yeah.
CPI, PPI, and again with the CPI. So the consensus sees no change, zero point 0.3 core month on month. But again, it's a composition that matter. We need to look for signs that there is no contagion from tariff goods to non-tariff goods and to services. Personally, I expect a tamer services inflation simply because the economy is weakening. You look at vacancies, home vacancies, rental homes especially, they are rising. So that's a good sign that the economy is weakening, and that's going to continue to drag down housing costs. The increase in services we had last month, I think it was a one-off. It was like a bunching of increases for categories that actually had been flat or deflating for a number of months. So I
Gotcha.
wouldn't be surprised to see a decline. In any event, with what's going on in the labor market, even if we get a little bit higher core PCs than expected, I don't think this is going to change the Fed very much at this stage with the NFP. We've got, I see the CPI print more as driving the risk of a 50 basis point cut than as, cutting down on the risk of a 25 basis point
Fine, fine. Makes
cut.
sense.
So asymmetry.
Okay, cool. Anything else or that's
We'll get the data on government deficit, which will confirm this de facto consolidation, and we will get the customs revenue. And what's really interesting about customs is that if you look at the ratio of revenues to goods import, it was roughly unchanged in July from June, 10%. So this is again, quite different from what the administration is talking about, threat of tariffs here, there. So again, with this administration, it's not what they are saying that is important, it's what they are doing. What I suspect could be going on there is that President Trump keeps granting exemption to various large corporates,
fine.
constituencies. And so we're not getting much of a tariff increase, which is again, I mean, from the 10%, which is already 5 times higher as we had before Trump.
Yeah,
But, you look at the Yale Budget Labs, I think that the average effective tariff is going to be about 18%. For the past 2 months, it's been around 10%. And based on the daily data on Treasury deposits, I think it's probably going to be about 10% as well for the third month. So again, it could be for all the noise about raising tariff, changing the
yeah,
regime and the economy,
yeah,
everything revolutionary. Actually, we're not seeing much change because we have the midterms to think about. It's in November next year. And the current approval rating of the administration on inflation is minus 20%.
yeah. Okay, cool. Awesome. Well, thank you. Wish everyone a great weekend. Obviously, wish all our clients, successful trading. And as always, please reach out. Any questions, any feedback, anything you have. And with that, I wish you a very happy weekend.
Good luck, everybody.
Thanks. Bye.